Hello, everyone. Welcome to episode 20 of the new Barbarians podcast. Today's Monday, May 12th. The podcast will hit platforms later today. Today, we are joined by Alex Fleiss, CEO of Rebellion Research. So we have a lot to talk about in terms of the market, but we do want to get to the discussion with Alex. So I'll quickly just run through a few things. One thing that I'm personally learning about in real time is that we're currently in a twist steepener regime. And hopefully Mark can cover that a little bit more. But basically, the yield curve is steepening, but that's not because of the long end. It's more because of the short end. And it can be challenging to interpret historically. The market probably anticipates higher inflation, potentially stronger growth in the more distant future, but the central bank is perceived to be addressing current weaker data to stabilize the markets. So it's kind of consistent with what we've been talking about now for months, that we do expect stimulus from the Fed. But we're still in this regime where inflation is up, and Mark will talk about what happened over the weekend. We see a big rally in stocks, continuing from last week's. And last week we had big rally. Stocks with exposure to oil did well. And then the only real statistically significant moves we saw were in earnings yield, where there was a 2 standard deviation move to the upside. And that was 3 standard deviations for small caps. Today, Asia is up modestly in Japan, around 3% in China. Europe's up, for some reason, the CAC is up more than the rest of Europe, but it's probably just playing catch up with Germany. The Dow's up over 2%, S&P 2.5%, NASDAQ's up over 3%, almost 3.5%. The Russell is up almost 3%. Gold is down 3%. Oil's up 2%. Bitcoin's down modestly following a big rally. It's at 102 right now, almost 103. And the VIX is also down back to 19. And with that, I will hand it off to Mark.
Thanks, Bill. Yeah, you were listing that as if it was like a fire sale or just silly numbers, up 3, up 2, and this is on the day. And and most of these names on the equity side are down on the year still. So I guess it's a which market do we have? Do we have the year-to-date market where equities are still down 4 or 5%? Gold is up in the 20s, and we have uncertainty on tariffs. Is that the one, or do we have what we saw over the weekend, where you're going to have free pharmaceutical drugs for everybody in the United States, or 80% discounts? You're going to have no tariffs or lower tariffs. And, as we say, Bob's your uncle, everything's fine. It's something in between what you and I were writing about over the weekend in our respective pieces. There's a very narrow thread of fiscal sustainability that Besson and company have to thread. And that has not changed. And we'll touch on that. So they have a long-term problem with interest expense, low growth, and high debt. So we're going to touch on that. What we do see, and Bill, remember, what was that piece? What was the earnings guidance that Wall Street had coming into 2025? The brightest and best and brightest?
Thank you for teeing that up, Mark. The outlook across the board was pretty rosy for the Wall Street experts, and no one anticipated Europe rallying. And basically it was all wrong. It was kind of continuing the Trump trade, and then Trump was inaugurated, and things started to downturn. crypto first, and then equities, I think, topped out on February 19th. And then, we saw this huge slide, and then somehow in April, things started to bounce back in anticipation of, trade wars softening. Some of that speculation, but yeah, the outlooks that I synthesized with my LLMs were completely wrong. And the portfolio I set up to try and gain exposure to the outlooks was performing very poorly.
All right, well, so with that backdrop, we call that the investment Zamboni. We like to go back over the rink a little bit and overlap some thoughts. So before I go forward, we like to go back. So you're right, earnings were rosy. There was 6 to 8% earnings growth, mostly not margin expansion or PE expansion, but more from earnings. Everything's fine. And the reason I mention that, and Alex is going to definitely chime in given his spot on the quant side. The reaction function in markets is still very dynamic. So I mentioned that because last week Ford cut guidance and withdrew it. Intel this week cuts 15% of its workforce. UPS 20,000 of its workforce. These are 3 to 5% numbers. Old-time companies like Panasonic and Price Waterhouse cutting. But also you have the tech companies, CrowdStrike. You figured after their problem with their Microsoft plugin they had either late last year, early this year, that they wouldn't be firing people, but they are. 5% of the workforce gone. Meta, a 12-month restructuring going on, cutting headcount. So you have this going on, and we just wonder, and we're going to show some numbers now, whether or not the tariff gambit really matters when they threw up numbers like 145% tariff on China, now down to 30%, maybe 10% if they provide some support for not supporting fentanyl imports into the U.S. So to me, you have two things going on. It's what Main Street's dealing with, which is low growth, unemployment ticking up a little bit, and as you said, inflation. And then there's this create the fire and put it out that Trump is doing, and whether or not it has staying power. So I'm going to go share a screen here and go through our scorecard and a few things that hopefully Alex will have an opinion on and share through the lens that he uses on the investment side. So here we go with this week's scorecard. As you know, we like to look at different domains. So when we talked about Main Street versus what we saw over the weekend with the administration saying we got to win, question is, do we have the year-to-date world in front of us, which is still NASDAQ down 4%, S&P down on the year, low growth reflected through a 13% decline in oil? Is that the game we have in with flows going into Europe with that 13.9%, ex-US, ex-Canada ETF? Is that the world we're in with, gold and safe havens? Or is it now what we're seeing month to date where NASDAQ's up 6%? Annualize that number. It's pretty nice. S&P up 4%. And oil down modestly, oil rebounding up 7%. And is that on Middle East tensions? So I'm going to rip through a couple other things, but that's which world are we in? The year-to-date world, which shows we have risk off and concern, or are we in a Trump save the day type of dynamic? And with a little bit of a nod to Bitcoin, Alex, on our last podcast, we spoke with Truvius's CEO, Connor Farley, and he was bringing up about, systematic approach to alpha. And so I was talking about Bitcoin, where it was emerging as a safer haven, whereas it should have been down year to date, this is last week, with equities. But it wasn't. It was up modestly, looking like almost like a treasury. And then we said it was actually picking up, and by the time we recorded, it had approached not quite this level, but look what it did. It pivoted to almost a risk-on asset. So Bitcoin has this sort of dual approach of now a safe haven and a risk-on asset. We'll put that to the side, but as you know, Bill might have told you, I'm more of a Bitcoin-focused person on the digital asset side, and it's getting tested and passing tests up and down, especially over the past 6 weeks in a very turbulent world.
No, I had dinner a few weeks ago with my dear friend Catherine Zhao, the head quant at Cantor Fitzgerald, and we both agreed that Bitcoin's actions throughout the market crash were really historic. It was the first time Bitcoin was a non-correlated asset. I actually published a paper in, I think, 2020, 2021 that showed that Bitcoin was, essentially a high beta, equity asset, if you will, to some extent, and that didn't really provide any type of, risk hedging at all. But that's not the case the last, 30, 60 days. We've seen Bitcoin move on its own, ignoring the equity market sell-off, and really, it was quite historic, actually. Much more historic, much more important than, we've seen the media, global media, give it credit for. So, this was the first time. At the same time, from a technical standpoint, Bitcoin does kind of have the double up, where when you saw the last time it hit 60,000, it came in a bit, 10, 20, 30%, and then came back to 60,000.
Yeah, you're talking about the last cycle in 20.
Exactly.
Yeah, yep.
So some of my friends have wondered, is this not really historic risk-off manifestation, but more just kind of trading in its own cycle, where there's still a lot of interest, and at 75 to 80,000, it still seems on a micro relative basis cheap, and so you're getting kind of a re-upping of investing, and if that's the case, as a Bitcoin holder, very scary, because obviously the last time it went from 60 to 16,000. So will Bitcoin shed 75% of its value the next year? I don't think so, but I'd say that the odds are above 10%, which is still, obviously frightening as a Bitcoin holder. But, Bitcoin does have just a fantastic following. So, even if it does have another crash, I would view that crash as probably a buying opportunity. It does not seem to be going away. And at the end of the day, what moves the markets are faith. And as long as any asset has significant faith, you'll see a movement to it. Warren Buffett's whole issue with gold for decades has been that beyond faith, it provides no value. And so he doesn't, it just can't appeal to a Warren Buffett. He can't get a yield out of it. Warren Buffett can buy a house and then, rent that house out to a family, make a yield, or he can buy Coca-Cola stock and see an earnings yield. And so that's what he knows, that's what he's comfortable with. And so for him, even as a 95-year-old, centibillionaire, he just can't feel comfortable with gold. And so an investor like that will never really buy Bitcoin. However, Bitcoin has legions and legions of followers.
And Alex, let's stay on that Warren Buffett part. At his sayonara or sign-off I forgot what stadium he was in, where he was given his annual meeting, 2 cans of Coke in front of him. Right, those are like his pillars. I'm a consumer products. I like companies with moats. But he did give a nod to the asset that provided the most gains. In fact, the gains that he couldn't give. He said Tim Cook of Apple has made more money for Berkshire Hathaway than I have. And Apple is a network stock. Apple is what Steve Jobs sold dreams. As a product, most programmers won't use Apple because it's just it's a locked in system that is hard to program with. But as a consumer product, obviously its price and market cap appreciation speaks for it. So I think he's speaking out of both sides of his mouth. I think that he made money on faith, on people believing in Apple and wanting to belong to a network, an Apple network that is very difficult to break once you're in. And I think it's very analogous to Bitcoin, and that's why I liked how you brought up faith. I never thought of it in that terms. But we are a tribal, communal people or species, and we love networks. And Bitcoin is the most secure network on the planet, and I think that is probably what's driving it. So I agree with your concern though, and people should be thinking about the potential for a drawdown like we saw in 21, which possible, sure.
I don't mean to be a hater of Tim Cook, but I look at
Let's go with it, Alex. Let's go with it.
I look at Apple's product portfolio, and the iPad was a Jobs idea. The iPhone was a Jobs idea. What new product has Tim Cook really brought to the table? Some can say that he took all of Jobs' ideas. Jobs was just chock full of ideas, and he's piloted them forward. But I mean, Jobs was so far ahead of the curve that BlackBerry, which owned the smartphone network, thought that he was, in his own world. They I don't want to say they ignored it. AT&T came to BlackBerry and said, "Hey, look what Jobs is doing," and they said, "People aren't going to want this. Jobs is wrong," and Jobs was totally right. And what have we seen since the iPhone 4, 5, or 6, or 7? You got 10,000 great tech guys making it a little bit better, a little bit better, a little bit better, a little better camera, but at the end of the day, it's essentially the same.
It's variations on a theme. He's a COO, to your point, right? He just was an operator.
And so I don't know. I have he's an excellent operator. He's an excellent operator, but I think Steve Jobs was the most imaginative engineer we've had in the last 50 years, and he didn't play an instrument. He was the conductor of global technology. The man understood what people were going to want and when they were going to want it in a way I don't think anyone really has compared to.
Since.
So
Ever.
So yeah,
Ever.
I think
Okay.
I think therefore by extension we think Buffett is giving a little too much credit to Cook and not a much.
Well, Cook has made him a lot of money, and whenever someone makes you that much money, how can you not be biased? I think it's almost impossible as a human being to not be biased when you've seen your shares, rise that much. So, Tim Cook has just done a phenomenal job of making Warren Buffett wealthier. So, it's hard for him to not be extremely.
Well, to your point, the legacy of Jobs with Cook's hand on the tiller, guiding it through a course that was set decades earlier, that still carried the day. I mean, to follow your theme, Alex, about Cook's contribution.
I'm just. What do you guys see that Cook has brought in terms of innovation? He's carried through a bunch of Jobs ideas, but Apple hasn't really brought new tech to the table in quite a while. But at the same time, they're the Mercedes-Benz of tech, and so by cementing this kind of Mercedes-Benz level of tech, you want the iPhone or you want the cheaper version, and so anyone that can afford the iPhone will generally get it at this point in society, and so Tim Cook deserves a lot of kudos for that.
So let's take that theme for a second before we go into some other area. They haven't saturated, but they are a mature company. Their growth rate.
By the way, also, you mentioned Bitcoin is a secure transfer, and I actually think that's a great point. As you see countries with more financial issues locked down on capital transfers.
Spain.
That's exactly. We saw over the weekend the news about Spain.
Can you give light on that? Because I showed my wife that, and she's like, "That's not true." I'm like, yeah, it is.
Yeah, no. So it's just becoming much harder to withdraw funds, and so the same thing's happening in France. My one of my best friends is French, and you can only take out like $500 every 24 hours, and so these countries are so scared of capital flight that they make it so you can only take out very little amounts of money. And so if you need $50,000 for whatever, or just because you want to move it, it's an issue, and that shouldn't be an issue. It's your
It
money.
was
You should be able to move whatever you want when you want to move it.
it was 3,000 in Spain, wasn't
30,
that the number?
3,500 euros is the, and if there's an issue with why you're moving it, or the fine on it is like 150,000. So there's a fine on your taking out your own money if you don't classify it correctly.
Are they trying to promote borrowing because it's cheaper to borrow at a 15% rate than try to get fined 150 grand? Like,
I mean,
what's
they're
going on?
they're just trying to keep capital flight from occurring, and that's just what they're worried about. And that action is going to be very bullish for Bitcoin, as long as countries put gates on capital movement. That's great for Bitcoin.
Yeah.
And but it's also great for America. America is, you can move money whenever you want, wherever you want in America, and we really don't have that issue here. And so, as Europe, the Mika 2 stuff that Europe is doing, there's a reason Tether is pulling out of Europe.
Yeah.
I mean, it's ridiculous overreach, and when you get a gigantic nation block putting out these laws, it's going to be great for the U.S. It's going to be great for Bitcoin. China, on the other hand, is still, they're still putting the gates down on capital movement. So, people talk about China being a reserve currency. Absolutely not. They don't allow you to take any money out. My Chinese friends who have capital in the country, they can't move it. And so, unless you, and by the way, most of my students are Chinese, and none of them want to live in China. They all want to get out of China, and they all want to live in either, America or, Europe. They mostly just want America. The truth is, at the end of the day, most Chinese people want to live in America.
Yeah.
I don't want to necessarily draw even more attention to some of the all-stars of the finance world, but it did seem like Ray Dalio was he had a video showing reserve currencies throughout history, and it did seem like he was positing that the China would become the reserve currency over the U.S. He didn't say it, but his graph sort of showed it.
There are a lot of smart finance guys out there. I would say that Ray Dalio made a lot of money from being a great finance marketer. I've never really found his finance wisdom to be very stimulating. I think Ackman's brilliant. I think Icon is brilliant. But Ray Dalio has never impressed me.
Well, we certainly welcome opinions on this show. So you're a fantastic guest, Alex. I guess this is probably a good time to segue a little bit into the intro about who you are and how you came to join us today. So I'll let you actually give an introduction to Rebellion Research, but I'll just recap a little bit about how you and I know each other. I have followed you on social media. I've seen you send out I think awards for best quants, and a lot of them are the people I know and the people I've been following for years. And then about a month and a half ago, I went to the Columbia Rebellion conference. Really enjoyed it. Ran into a lot of my people. Several of my former colleagues from Two Sigma were, speakers on panels. Yen Liu of Wolf Research was there. So I got to see a lot of people. And it was a great conference. And then, I definitely want to talk about your upcoming conference, but I think the last thing I'll add, which I think will hopefully give a little bit of color about you as well, is the description on your SSRN author page. It says machine learning, national defense, natural language processing, space and market physics, reinforcement learning, financial engineering, economics, artificial intelligence investing, and machine learning investing. Check out my think tank, rebellionresearch.com. And then I do have several questions from your friend, Professor Liu, that I'd like to pose to you after you maybe just give an introduction about Rebellion. And
Sure. So I have been a quant since the 90s. I was inspired by Professor Judea Pearl's paper on predictive AI from 1991. It was the first real breakthrough in tech, showing that AI could make uh, you know, percent predictions, and so looking at 60-70% chance of an occurrence happening and consistently showing positive performance. Judea Pearl's, in my opinion, one of the fathers of AI, who does not get enough credit. Super brilliant man. Unfortunately, if you guys remember Daniel Pearl, the Wall Street Journal reporter who was beheaded by ISIS, that was Judea Pearl's son. And so, as any father, can tell you, when you lose a child, you will never recover. Absolutely never recover. And to lose a son in such a brutal fashion, eats away your soul every second you're still alive. And so, Judea's research, unfortunately, you know, stopped. And I'm just amazed he hasn't jumped off a bridge, because if my son was beheaded by ISIS, I think the pain of it would probably make me unable to go on. But Judea has gone on, and he's still a teacher. But anyway,
So first of all, that's a to go back to 1991 and connect with someone who we don't hear about, kind of speaks to your level of attention to curating the right deal, amount of information. Who now do you look at on the active, on not who's a peer of yours, but who do you look at as someone who's pushing the envelope and providing value in the space?
that's a great question. That's a really great question.
Besides
I
Bill Mann.
Yeah, no. Bill's a super smart guy, and that's why I was eager to jump on this. But I started working with Jan LeCun in 04, 05, 06-ish. He was my research partner's PhD advisor at Quant. And so CNNs, became very attractive to me because of Professor LeCun from NYU, who's now actually head of AI at Facebook. Machines were able to read numbers and digest them intelligently, and so that was very important for Rebellion Research. Rebellion Research originally couldn't find a clean data source, and so we built our own script to read data from SEC.gov and take in that data to create predictions. So without Jan LeCun's work, we would never have built what we built, and without Judea Pearl's work, we never built what we built. So for me, Jan LeCun and Judea Pearl were the two people who made my business possible. I've Judea and I've told him a million times, Rebellion Research would never be here without you. Would never be here without you. I tell him all the time, I'm chief of your fan club, Judea. But you know, I love UCLA's got a great computer science program, and actually I'm very honored that UCLA's head of financial engineering, Eric Reiner, is going to be joining the Fordham conference that was happening later. And so, in addition to running Rebellion Research, which is you know, an AI-powered investment platform for individual investors, a media concern, putting out articles, having over 1 million readers in a month, and running conferences. I have been teaching at a variety of schools, Cornell, Fordham, Berkeley, Columbia, and so these schools started asking Rebellion and myself to throw their conferences and bring in quant and AI stars. And it's obviously very beneficial for the school, as prospective students sees so and so hedge fund star from Two Sigma, that makes them more inclined to want to apply to the school.
And which school that you mentioned are you engaged doing that with?
So I taught at Cornell for nearly a decade, and now I'm a board member at the School of Financial Engineering, and I'm also a board member at the Fordham Gabelli
Got it.
Quant, and I have been a research instructor at Columbia Mathematics and Finance for 8-9 years. I was a research instructor at Berkeley Haas School of Financial Engineering for 8-9 years. And I lectured at MIT for a bit. I threw the Berkeley conference 1 year, but frankly, flying out of San Francisco is just too much work. And as much as I love these conferences, they are so much fun for me. They're like a bar mitzvah. Flying to San Francisco is like going to London. It's just too much. And these are not financially very, we are not a conference company, and so
Yep.
we do these educational conferences because they're a lot of fun and they're really highly stimulating, but they're not the most lucrative. And so there's
Take a lot of effort.
they take a lot of effort with without financial payout.
So can I ask Alex at Cornell? This is a ancillary question. I know that I've worked with this Bitcoiner named Lisa Huff, who's based out of Houston, and her daughter recently graduated from Cornell with a degree in Bitcoin, where it's a multidiscipline. I'm not sure of exactly all the sciences, but it's kind of invites the what do they call them? The polymaths to view all of the dynamics behind Bitcoin. And I don't know if you've heard of that there at Cornell, or is that something that probably is just so new that it hasn't really bubbled up?
I've vaguely heard that there was a Bitcoin degree, but I don't, so the School of Financial Engineering is technically under the Cornell Engineering, not Cornell, not the business school.
The college.
No, the college is the undergrad. The Graduate School of Financial Engineering is under the Cornell Engineering umbrella, not the Cornell Business School.
Got it. So it'd be a little different.
Mm-hmm.
Cool.
And I believe the business school is the one that offers the crypto degree.
Got it.
Interesting. So I would like to address some of the questions that came in. We rarely get them on our live cast, so we would definitely appreciate these. So the first question from your friend, Professor Lou, is who's in the lead, China or US in AI? And then I'll just continue. When will we have AGI, 1, 3, or 5 years? And super AGI become a reality? 2, 5, or 10 years?
Let's do it one at a time. First, I don't think, I think China and the US, they're, from a technical ability standpoint, they're pretty comparable. DeepSeek came pretty close to OpenAI and Claude. So, also so many of the Chinese scientists come over to America, and look at a lot of the development in the U.S. It's a lot of Chinese minds. So, and so many of the great Chinese minds end up leaving China and coming to the U.S. because living standards in the U.S. are still highly superior to China, according to my students. I don't know. This is what my students tell me. And in fact, my students generally tell me that they would take a B job in the U.S. over an A firm in China. But I would say that the U.S. and China are, I don't think there's, one really has more than the other. I think Huawei can probably put it, I think within the next 6 months to 3 months, Huawei chips will be as good as NVIDIA. I don't think NVIDIA is going to be so. I mean, NVIDIA's not. Their PE ratios come all the way down, so they're not trading at the amazing monopoly level PE ratio that they used to be. They're just going to make like 6 next year or 5 next year this year, and stocks like 120, 130. So it's like it's generally it's a tech PE ratio, and so I don't think the market really views. I think very soon we'll see another white paper from DeepSeek showing only Chinese chips, showing at or superiority to the U.S. And it'll go back and forth.
When will we have AGI?
Oh, we're very far from that. Not in my lifetime.
Okay, so
that was. Hold on a second. Hold on. That was one of the quickest answers I've ever heard on a big subject. I mean, Bill went right for the dessert, and I thought we were still eating our meat here.
No, AGI is.
I love it.
That's Back to the Future, Michael J. Fox stuff. That's just not.
You rang Bill's bell on the old movies.
Yeah,
I do love old movies also, and when I think of AGI, I do think of of Doc, and it's just and there was that cute dog he had named after the scientist. It doesn't matter, but. No, it was a great piece of Hollywood, but no, AGI is very far from now. The LLMs are still tons and tons and tons of phrases and statements put together by these kind of you know sweatshops in Bangladesh, and you get thousands of workers who put together these phrases, and it's not that intelligent. They're getting good at it. They're getting good at creating phrases and putting them together. But this was an idea that Professor Jan LeCun had 20 years ago. Just the power wasn't there yet. And so as chips have gotten much better, AI will be quicker. And what took 7 hours in 2005 can be done in a few seconds in 2025. So what we're seeing today is a speeding up of AI. But there's a big difference between speeding up and raising IQ. And so I think people
So is this a Tim Cook era of AI?
I like that a lot. I like that a lot. And I would say my instinct is very much so, yes. And so we will start seeing AI offered in a much more efficient manner for society, and we'll start seeing it more and more useful. I think AI is very useful and becoming more and more useful for companies. And so when people start saying, where's the revenue? The revenue is going to be, you guys were mentioning job loss earlier. What you're going to see is a higher efficiency. And not just higher efficiency, but more and more companies created that can use this AI to create more and more efficiency. And so I think we'll have net more and more jobs, but older companies will be able to operate with fewer employees, and many more new companies will be able to operate because of AI.
Sounds like you got to own a company.
I mean, it's a good point. It's own a company or own a product or a service. Yeah.
And I think goes without saying that understanding how to use AI will help you with your job, but it won't replace you. And if you don't learn how to use AI, it's probably going to put you behind. And then just to respond a little bit, and Back to the Future, I'm not sure they were using a lot of AI, but that they did use plutonium to power a DeLorean to become a time machine.
I just meant that time travel to me is like AGI.
Okay.
I mean, but AGI is obviously much closer than time travel. I don't think time travel exists. I don't, time can be messed with, but I don't think you can go backwards in time. Whereas.
Hold on a second, Alex. The fact that I love how Bill found you, because we like having guests who actually entertain that and show that you have a process to examine whether or not you can go back in time. And given the current information, you're saying, no, you can't. I don't think I have any friends or people who actually have that ability to go through that process to come to that determination. And that's why we want to have you on here, because we have so many things moving fast in markets, from trade being redone, debt loads that have to be cut, and this, DeepSeek and, just tearing down NVIDIA's leadership position. Had to have someone who actually entertains thoughts that most people wouldn't even consider.
Well, you mentioned all the different, I have a great appetite for a variety of research. And, I spent a year and a half with the Air Force Scientific Office of Research, their laboratory, building deep learning to try and map the solar system. So I have enjoyed a nice variety of research. But, and so I'll try and do my best to continue to entertain you.
Well, thank you. So we do have two more questions. Should corporates do the strategy trade, the MicroStrategy, load up on Bitcoin, leverage Bitcoin, and super leverage Bitcoin?
Well, the wise man knows what he doesn't know, and I don't know a lot about Bitcoin. I've only written one paper on it as a hedge on equity, and so that's very, very small, limiting niche area that I wrote on. But I do know Anton Golub is a really bright crypto mind, a mind I've been following for many years. He's a Bitcoin investor, crypto investor. He started a crypto exchange. He's one of, I think, the more intelligent crypto minds, and he actually feels that Saylor and MicroStrategy or strategy are the greatest threat to Bitcoin's price action in the near future. He thinks that the strategy is a highly dangerous mechanism, and it's not a true Bitcoin holding company. It's a highly leveraged Bitcoin holding company, and all assets have, I mean, look at gold, look at anything. Assets come and assets go. I mean, oil went from, let's not forget, oil went from 148 to negative 17, right, at one point. I remember being at LaGuardia Airport lounge looking at oil opening one morning. It was like negative 25 a barrel, or negative, you know. So all assets will have great fluctuations. Bitcoin will have a fluctuation. And what is Saylor going to do if and when that happens, when he gets these margin calls? And then if he has to sell, and this guy represents 2.5%, 3% of the market, I mean, that could be devastating for Bitcoin, devastating. And these are not my ideas. This is Anton Golub,
Yeah.
who you guys should. I highly encourage anyone to follow Anton. He's
I do, and I've heard his take on strategy, and there are a few things. I would say that first of all, he's not highly levered. I agree that anytime you see two things: concentration, which he's, Mount Gox is more concentrated. We have sovereign entities that are more concentrated. He isn't that levered yet. He could be, but his leverage ratio, I think, is below 35%. And most of it is done through equity, which is permanent capital. So I've heard a lot about Anton, or read him, and I do think he's well thought. I think on this one, it's a potential. It's not there yet. And believe me, as a Bitcoin holder, I'm not looking to pump the price. I'm looking to make sure that my stack and my decision is accurate. So I always come at it from a risk manager's standpoint about where can I get hurt. And I would like to see strategies engagement be diluted by other true, other Bitcoin company firms where it's a lower portion of their assets. Totally agree. But I don't think, and I'll just put that, I'll put it, I'll stop there, but I'll say, I've given it thought. I'm on the other side, or not quite as concerned on the leverage standpoint, but that's it.
Yeah, I guess I could jump in more about MicroStrategy, but we will get to the last question at least, and then we can always loop back. Alex, when will we see an AI trading investing better than all humans?
I want to say never, because human beings will take risks that AI won't take. I mean, at the same time, you could, I guess, program an AI to take risks, but humans are. I mean, you look at like a Mark Fisher, the oil trader, and his track record from like 1989 to 93 was just insane. The man called every dip and movement, and so much of price movement is artistic, if you will, is artistic, understanding the feeling of the market, understanding the feeling of the world, and kind of being able to combine all of that. And so we'll have in time an AI that can take in many different, market psychology. Market psychology is going to be the hardest data set to feed into an AI, because how do you really do that? How do you really take the temperature of the market? I don't think the VIX is, and so.
I knew I liked you, Alex.
Yeah, I try. I just try to be as honest as possible. For me, I used to like to say that AI and human beings are going to be like cable and satellite, but I guess now it's cable, satellite, and streaming. And so we've got probably, will AI become streaming and dominate, but will we still have tons of cable and human beings? Sure. And so we've seen this huge jump in passive investing, but one thing we learned from Fidelity, when Fidelity looked at their best returning accounts over 75 years, there were outliers for the best returning accounts. And these were the accounts that had no touching. And so if you just did nothing with your stocks, you made the most money over a 75-year period when Fidelity looked at these accounts. And these were accounts that generally people had forgotten about or had lost their passwords or just didn't know about. And so my issue with passive investing is human beings, they buy the triple Q. Then when Trump scares the heck out of them on April 8th, they sell the triple Q, go to cash. Then when things are better, they buy the triple Q again. Things are worse, sell the triple Q. And so, when you look at, I think it was the best forming mutual fund of the 2000s, the average investor lost money. And so human beings love to sell at the bottom, love to buy at the top. And so I think that will eventually kind of slow down this movement from active to passive. Also, human beings love a story. And so, that's why I think humans will kind of stick with active to a certain extent. But I think there will be a huge percentage of the active investing will be AI. People will use AI systems to actively manage their money. It's, why not? I don't, that's what I expect.
And Alex, when we look at active and passive, pulling it back from the liquid markets, one of the bigger, and maybe it goes to your point about leave it alone, one of the bigger performers up until the rate hike, which tells you something, was private equity, which captive money, leverage involved. Do you have an opinion on what are emergent trends that differ from structuring to a true 20-year organic trend? Obviously, I'm thinking about Bitcoin as being one of them, but sometimes you just need to be in the right church, not the right pew. So if you're going down, what church do people need to be in that are 25 years old for work, or say 50 years old, as now our longevity goes to 90, 95 years? What church they need to be in from the investment standpoint? Is passive good enough, or do they need to really start looking and adopting the tools that you and Bill have?
Well, if you can get to the best managers, you look at, who was the best performing fund last year? It was the guy who called oil in 2014, the Point State Capital guy, Schreiber.
Yep.
His fund did like 55%. I was looking through his holdings, and they were so random, so randomly selected, and so intelligently put together that if you're a large enough entity, you can pick these great managers and stay with these great managers. But if you're a 28-year-old doctor or lawyer or tech, I would say just put in the SPY. I honestly, or half SPY, half triple Q, and just leave it at that, or maybe a third SPY, a third triple Q, a third IWM. If that's the for equity exposure, and just don't touch it, leave it at that. And then if you can start amassing money, maybe you can start finding managers. But finding managers takes a ton of work. It really takes a ton of work. Manager selection is not easy, and it's very hard to find great funds. There are funds that generally do much better than other funds. I mean, you look at the mutual fund OLGAX, OLGAX. It's JP Morgan's large cap growth fund. Guri Devapalli is probably arguably the best mutual fund manager alive, in my opinion. The man has consistently picked just fantastic companies, from Regeneron to NVIDIA. The man's been ahead of the curve consistently, and now OLGAX runs a huge amount of money, so it's going to be a little harder for him to allocate. I think guy was running $3 billion, $2 billion, now he's running $100 billion. But there are some managers who can see ahead of the curve and just consistently do very, very well. You look at a Glenn Greenberg. Glenn Greenberg ran Chieftain Capital, and then now it's Brave Warrior. And I think a Glenn Greenberg and a Guri Devapalli are two managers that, on average, AI is not going to be able to do as well as. These are just really terrific investment managers.
Are these concentrated guys who have 35 positions and get?
So Guri is much more diverse. Over a long period, Guri is much safer than Glenn. Glenn will go. Glenn did a face plant on Valiant. He did. I think he was up to 45% Valiant, but that was also because Glenn bought a Valiant at 20 a share, and the thing went to 260 a share. For our viewers who don't know Valiant, VRX, it was a Canadian pharma company in 2010 that was given to Mike Pearson. And actually, funnily enough, Mike Pearson's was a McKinsey guy. And beware of McKinsey consultants becoming CEOs.
What could go wrong?
Well, what's really going to mess with your mind today is who was Mike Pearson's best friend at McKinsey? You want to give a gander?
Was he
a certain Enron executive? Yes. Jeff Skilling, when he was 23 years old, his best friend was Mike Pearson. So, when it comes to financial shenanigans, obviously
I didn't see that coming.
You have a lot of really brilliant McKinsey minds, just brilliant McKinsey minds. I think it's a wonderful company. I'm not going to talk about consulting and hit the whole Palantir. No Palantir hits McKinsey in consulting, but I know many, McKinsey minds, very smart. They hired me to do some contracting work a few years ago, and I was very impressed with everyone I worked with. But yes, Jeff Skilling and Mike Pearson were best friends at McKinsey when they were 23. Mike Pearson took Valiant from 10-12 a share up to 268 a share, which is just phenomenal growth. He did this by rolling up lots of pharma companies and playing with the numbers and playing with the financials of it. And so what you get are certain managers will do better over shorter periods of time, and those are the ones you have to be worried about. But a manager like Schreiber at Point State Capital, he's someone who I would, be comfortable over a 10, 20-year period, or, expanding it to a Glenn. Glenn Greenberg is a little more dangerous because Glenn will, but look at Glenn's last 3-4 years of performance at Brave Warrior. It's been fantastic. Glenn is really, really impressive guy. Super, super impressive guy. And I think he's really one of the best investors alive. The man should be running much more money than the man should be running $50 billion, not $3, $4, or $5 billion. But he had a fight with his partners, and he's very tough to work with. And his former partner, John Shapiro, a very nice guy, actually. He was the chairman of the Dalton School on New York's Upper East Side. Shapiro, when Chieftain Capital was at peak, maybe it was $6 billion, the partners couldn't get along together, and they brought in a consulting firm to try to get them to work it out. And Shapiro basically decided, hey, I'd rather be poor and have a smaller company than work with Glenn. And so that was a big detractor to Glenn's growth. But in terms of concentrated managers, I'd say Glenn is the best alive today. And in terms of diversified managers, I'd say the mutual fund manager Gary Devil-Polly, ticker OLGAX, is probably the best alive today. And on average, over a 5 and 10 year period, those two will beat the markets, and for as long as they stay alive, and picking managers like that will improve your returns substantially. I mean, the problem with institutional allocation is that you get so many managers of funds who are just more scared to lose their job than they are to pick the best performance. And so that's the problem with institutional management. I mean, most of the endowment managers of today, college endowment managers of today, are useless, scared of their shadow, scared of getting, they just don't want to get fired. And so they want to stick with the, Apollo equity and, but then you get the issue with, where they have to then fire sale private equity when it becomes an issue. But,
Yep.
Yeah. I mean, private equity, it's a nice bucket, but you can't go hog wild in anything. Bulls and bears make money, pigs get slaughtered. And so, have a little Bitcoin because it seems to be a growth asset. But if you have too much of something, you're going to run into trouble at some point.
Yep.
You always want to keep dry powder for when the inevitable sell-off comes, be it in private equity, be it in oil, be it in Bitcoin. There will be an inevitable sell-off in every asset at any given point. No asset is ever immune to sell-offs. All assets will have sell-offs.
As we say, all assets eventually become a liability for a period of time.
100%.
And you were talking about conferences. In times of flux, I do like to, one reason why Bill and I want to do this, it forces us to meet new people and get and check our notes. But if I checked the show notes earlier, you're hosting or going to a conference in the
So yeah,
next week or?
I'm a board member of the Fordham Gabelli School of Quantitative Finance, and Rebellion Research, hosts conferences for these schools: Columbia, Berkeley, MIT, Cornell, and Fordham will be May 22nd. And if you look through our agenda, it's just a who's who of quant stars. I mean, it's really unbelievable. We have Tony Berkman runs data.
Wow.
Claudia Perlich is basically number two data for Two Sigma. Um, and actually, I think we're bringing in Natalia Demetria, who's the head of data for Schonfeld, to moderate that panel. And then the investment.
I spent a lot of time with Natalia back in the day. Good friend of mine.
Brilliant.
I remember
brilliant.
meeting her with you, Bill, when you brought me in.
Yeah.
That's right.
She's an astrophysicist turned quant. So, she's just absolutely fantastic. But, so you talk about who I like today. Peter Cotton is someone I really like today. He's someone who's become obsessed with micro predictions, which is making more smaller predictions to aggregate for a larger prediction. And he thinks that's the more efficient way to predict. And there's something to be said for that. And Igor Halperin is a total idol of mine, who's really the first Wall Street quant to push reinforcement learning. Now, Rebellion Research, we started using reinforcement learning in 2006. But I'd never heard of anyone using reinforcement learning besides Simons. And then Igor Halperin. I attended a lecture of his at NYU in 2011 on RL and investing. And the two of them are just wonderful. And Francesco Fabozzi is the son of Frank Fabozzi, the legendary finance professor. He's research director of Yale's International Center of Finance. Really, really smart guy. Still just a kid, though, like 30, 31 years old. And so he'll moderate that. I try to just bring in cool minds, and it's a fantastic networking opportunity. And so, during a lot of the scariness of March and April, I went to the Columbia conference, scared out of my mind, and a lot of the smarter quants I spoke to said, it'll be okay, it'll be okay. Trump will make deals. Once Trump starts making deals, the market's going to V back and just stay invested. So, which is amazing because I was canvassing all of my super huge hedge fund friends from all the biggest funds. I mean, Millennium, Bridgewater, Citadel, and they were all going net short the market in April. And yet we saw this V recovery. So it really is about who you listen to.
Where do you think they went for that information? Because one reason why we kicked off the top was we have a lot of moving parts, and some of the parts are forced into motion by Trump to move. He's creating flux because that's his style.
It is. He likes to break it.
And then say, look what I fixed. And maybe there's a residual benefit. We'll see.
I mean, Trump was on Oprah in the 80s, griping about how Japan had all these tariffs on the U.S. and we had, free access for Japan, and that, that you could sell a VCR in the U.S., but we couldn't sell a VCR in Japan. And that was just blatantly unfair. And this was a belief that became more and more and more entrenched in his mind. And he made it clear on the campaign trail he was going to, make trade fair. And at first, it's going to scare everybody. It scared the heck out of me. I had multiple sleepless nights. Many of my friends who run gigantic funds and have gigantic jobs had sleepless nights as well. I think most of Wall Street had sleepless nights. But at the end of the day, if Trump can deliver more trade access for U.S. companies, we could be in for just a gigantically strong economy, huge economic growth. And so he's delivering. I mean, we are close to a deal with China. And I'll tell you, China is not in a position to not make a deal with us. China needs to make a deal. They've had like 45 banks fail in the last 3 months. On top of
dude, how do you know that? I mean, like,
I didn't see that headline either. Yeah,
it's not being, that's amazing actually. It's not being pushed by mainstream media, but there have been this like 2,000 or 3,000 Chinese banks, but something like 45 of them, and just the number 15 bank failed maybe 2-3 weeks ago.
I mean, I even get the South China Morning News.
Oh yeah, well, there's not going to be in that.
I didn't think they were allowed to fail.
Well, the investors will be made whole, and the banks will be shifted to some other bank, but that entity will just disappear.
Dissolve, insolvent, I guess.
Yeah, insolvent. But and so and that's something I've been getting from all my Chinese students have been telling me, that China is not in a great place right now, economically. And when you consider that it's an $18 billion GDP announced, so figure that's a lie by 10-20%. And the real GDP is like 15 or 16 billion, and trade to the U.S. is 700 billion. They can't afford to mess with us, so they'll do a deal, and Trump knows that, and so he'll do a deal, and a deal with China mixed with a deal with the UK. Everyone else will fall in line and start doing deals, and if that's the case, and we just get deal after deal after deal, the market invests on tomorrow. The market does not invest on today, and so, I mean, I said to a hedge fund manager, a friend of mine, when the IWM was like 185, I said, you know what, if he keeps doing these deals, the IWM could be at like 270. We could see just a gigantic, face-ripping rally.
Because that's who got hurt, were the small importers. I mean, I had someone who was just dying violently about the potential of their business being just sidelined for months because of the costs.
Exactly. And that's why the market, crashed in April, because the idea of, all of this cost and all of this dislocation for the consumer, it was scary as heck. I was scared out of my mind. But he is starting to make these deals. And if he can make a deal with China, everyone else will fall into line. There's no country that's not going to want to make a deal. We just offer too much wealth. We are still the big gorilla in town. And I think we have at least another decade or two of being the reserve currency. I don't see someone taking our place. Honestly, no. Bitcoin has a better chance of taking the place of being the reserve currency than China does. People are scared the heck of China. They don't want to put their money in China.
No. Yep.
I don't know who will be a reserve currency, but if Bitcoin becomes a reserve currency, I would say that's probably the biggest threat to the U.S. is Bitcoin.
If rails get fast, you don't have to rely on one bucket, like just put it in U.S. dollars. If we have a stable coin that has multi-currency, if Bitcoin gets up to where we think it is, which is 20 plus trillion in the next 3 to 5 years, then you're going to have some options where now you have pools of capital that are approaching that of the U.S. Not quite, but yeah, I agree. The U.S. dollar will be the trade currency for sure.
Nope.
And reserve status will go into some other assets as well.
But I would say, I love Switzerland. Switzerland's doing a great job, but Europe as a whole it's a long-term short.
It is an own goal, Alex. It is it is sad to watch.
It's sad. It's very sad. How are they not going to go down? Especially even if they are just flat, China will grow, the U.S. will grow, Asia as a whole will grow, and Europe will become lesser and lesser because you really in the markets, if you just don't grow and everybody else grows, you become lesser, and so
it's become literally a museum.
Yes.
And did you see the paper by in last September by Mario Draghi? It's funny. The ECB or the EU knows they have a problem, and they usually give. If they want to not fix a problem, they usually give a mandate to a commission because they know commissions don't do anything. But in this particular instance, they gave it to a specific person, which is unusual. They gave it to Mario Draghi to be in charge of developing a plan to help the European lack of growth, to help to innovate on the industry side, right? Because the stocks, was it 600? Has like 7% technology. Like all in, we're like 50, 55 US. Mm-hmm. They have so he did this 400-page plan, and it was a grim picture of where they stand on innovation.
It's very hard to innovate. When you consider there's too much red tape, there's not enough capital available, and government doesn't want to, China, to their credit, they're throwing lots of money to innovation. Europe is throwing money at migration, And I mean, I don't want to make this a political thing, but Rome, one of the reasons Rome fell was a devaluation of the currency and making citizenship cheap. They let in too many people, nobody wanted to fight anymore, and so you had no army left to protect it. Europe can't afford the migration that it's offered, irrespective of who these migrants are and where they're
Yeah.
from. Europe can't afford to take care of them. They just don't have the money, and they're putting their resources towards that versus AI innovation. And so is not the UK is not going to be able to compete technologically with China or the way they used to be. I mean, the UK is a short, France is a short. Frankly, Europe is relative to the US and China. Europe is a short, and Europe is an overall 30 years. I mean, we have inflation, and so prices will rise. But no, I think I think Europe's in terrible trouble.
Yeah.
I mean, just terrible, terrible trouble. You can't do things you can't afford. That's what kills nation states. And Europe can't afford the migration it's let in. When you look at the money they're giving out to migrants, they just can't afford it. I'm not taking a stance on migration and migrants. I'm not taking a stance.
No,
I'm just saying what you can and can't afford.
Yeah, you're just pointing out where allocations of dollars are.
Yes.
And it's everyone can do what they want, but I think the most instructive action in 2025 has been Germany's constitutional revocation of their debt brake. It's a great German word. It has like 14 letters. I wish I could say it. It's like Schaschenschusen. And they put it in after the '08 crisis because 83% debt to GDP scared the hell out of them. They grew out of it. They were able to pay it down. They got down to 60. And now with the burden of NATO being pushed back on them from Trump, they're like, we have to fund it. So they removed it. So there's Europe changes afoot, and they're doing actions that speak to either unexpected or unwanted, which is they don't want to break their 65% debt limit on GDP. So it might start getting tribal in Germany or in Europe as Germany starts to shoulder the military spend.
Oh.
It's back to what we said at the top of the hour is that to have tools to help sort through all this, and as you said, reinforce what you think your thesis is. We call it Zamboni, you call it you call it what type of reinforcement?
Reinforcement learning?
Reinforcement learning. If you're not doing that in this stage with the degree of change that is going on, you're going to be investing in the next pharmaceutical roll-up.
Yeah. But education's so important. When you have great universities, you're going to have great output. And China is creating great universities, and so I am bullish on China long term. Though they might have some issues right now, long term they are educating very well. They are, creating a lot of knowledge, and that's just not where the dollars are going in the UK. Nobody's, there's a few good schools in the UK. You've got your Oxford, you've got your, and that's generally what happens. You get a few really good schools, and the rest kind of start falling apart. And the University of Manchester, which was 20 years ago a very good school, is becoming a very mediocre school. And a lot of these once were good schools are becoming very mediocre. And so you get just a huge class structure, and that's not good for innovation. When you get a few people with high knowledge and wealth and the rest not, it's not very good for innovation.
It's going to die in the vine. So on that, we're going to wrap up soon, but before we do that, in support of what you said about the egalitarian efforts that you and your conference are doing, who are some of the folks who are actually spending dough and sponsoring your efforts?
Yeah, we have a host of, so our lead sponsor.
Here we go.
So
Thanks,
Rebellion's partner, London Stock Exchange, has been our partner for a few years now. And you mentioned the Wall Street Quant Awards. They partner with us to throw that in December at the end of the year, and we'll be doing that again December 3rd at the London Stock Exchange's headquarters downtown for our our awards of best data minds, best AI minds. And so we love the London Stock Exchange. And Bloomberg has been a good supporter, not this conference because the people who have been helpful with Bloomberg actually happen to be traveling then, so we will not have Bloomberg. But you have DeepMM, which is a AI powered market making. You have Shakudo, which is AI development for smaller firms. BMLL, which is a great partner of ours. They offer some of the best data around for funds and banks. OpenBB is a very interesting firm. My buddy Didier Lopes has created really one of the best new quant tools of the last 10 years. He doesn't like to call it a rival to the Bloomberg terminal, but many people do call it a rival to the Bloomberg terminal. It's really fantastic stuff. I highly recommend everyone to check out OpenBB. It's very, very useful for any quant.
Yep. We use it as well, and are actually just starting to unlock it, and we have to because it allows us such optionality on data sets. And as you know, we need to get data to make decisions.
The dashboard's cool as well as the data pipelines for pulling it into notebooks.
Yeah. And then we've got Civ, which is that fun Ford thingy logo, and they're looking for data for you. Among huge data sets, they try to find the best data for you. We are sponsored by a book, Generative AI for Trading and Asset Management, by Dr. Ernest Chan, who's a hedge fund manager and a leading AI mind. Super brilliant guy, met at MIT 4 or 5 years ago, who I like to think of him as a friend now. And his Generative AI book is actually, I'm on the back cover of the book recommending it. Big fan of it. And so check out that book. I think it's 1995 from Wiley Press. And then Data Bento is my very dear friend Christina Key's firm. They offer just a huge array of data. Christina Key's one of the smartest quant minds out there. Her hedge fund Dome Yard LP was 7% of the New York Stock Exchange at one time. Data Bento's become just a gigantic offering. And then we've got Lean, radically open source algorithmic trading engine by Quant Connect. We've got Zoonova, which is a wonderful algo assistance firm. And then IAQF is the largest association of quant finance in the country. We're happy, to have them as a kind of stamp of approval. CQF Institute, very similar situation. And Typhon is a large family of hedge funds out of Miami.
Yep,
and so,
heard them.
Yep. And Magna Libra is a trading and advisory firm that hedge funds are utilizing to get the next step. And Quant Insider is, I think it's the largest learning. I think they have like 30,000 students around the globe for learning quant. It's a very, very affordable way to access quant classes. So instead of paying $1,000, you're paying $40, $50, $70.
Wow.
PyQuant News is just news on Python and Quant.
Yep, which is becoming, we're using, Bill's using LLMs to kind of hyper accelerate that process.
Yeah, Flyjets is a random sponsor. They are a private jet exchange where you can go on and buy and sell hours for private jets.
Well, so they obviously think highly of your clientele if they're advertising with you as far as
they attended a conference and they just felt there was a lot of money at the conference, and so they said, if there's so much money at this conference, maybe we should sponsor it.
That's it. All right. Make that flight to San Francisco a little easier next time, Alex.
Sure. There you go. Well, yeah, we're an hour and 15. I think we've gone longer than usual, but this was such a good conversation that I'm glad we let it flow.
Yeah, thank you for the invitation.
That was the bomb, Alex. Load of fun. Look forward to. I'll be in Texas, which is also want to plug. I'll be doing this with Bill next week. To Houston or Austin, speaking to clients, meeting with Blockstream and my friend Lisa Huff, who's a Bitcoin advocate. So anyone looking for meetings, please DM me. I'll be there all week among the cities.
And I will see you in 10 days at Lincoln Center for the Quant Vision Conference.
Wonderful, Bill. Look forward to seeing you there.
Okay. So we'll sign off. Thanks, everyone.
Wrap it up. Take care, guys.